Hello and welcome to Investing Confidential. It's been a while. I haven't been doing many of these. I've been real busy, just company merger and everything else. But I think, as I said, the last video I did, which is about a month ago, I think Tuesday is going to be a pivotal turning point. No matter who gets elected. In fact, it doesn't really matter who you vote for. Well, it doesn't matter who you vote for, but from a financial standpoint, no matter who gets in, Tuesday will be a turning point in the marketplace. And I mean, you see, look, the reason I'm recording with this debt clock is because it's all that matters. Nothing else matters. Nothing else matters. The debt is almost 36 trillion. It's going to accelerate, right? So this is an accelerant. The election is going to be an accelerant. No matter who gets in, they're going to jam up the deficit. And you know, finally, as you can see here, there are some pundits writing about it, right? Wall Street Journal, Bloomberg, whatever. They're addressing it, and the budget gap just gets wider and wider. And as an investor, as this article says, and I've been telling you this, you don't have to read these stupid articles from the mainstream financial press, but if you're ignoring what's going on with the debt, you're insane. You're crazy. You shouldn't be investing because this is the pivotal figure. I mean, temporarily, the government can manipulate anything. I mean, today is November 1st. If you guys looked at the job numbers today, they were shocking. But if you watched my old 100 plus videos I've done, you wouldn't be surprised because I've been telling you over and over that the data, the government data, is false. It's misleading. Okay, and it has nothing to do with being fake numbers. It has to do with the fact that the government obviously wants the most positive news coming out, and the misleading numbers are easily manipulated because at the end of the day, if 10 years ago you went out and you surveyed 100 people and you got 80 responses. And by the way, the whole idea of surveying, using surveys today, calling people, sending them out, I mean, it's ridiculous. But anyway, you surveyed people 10 years ago, 20 years ago, there you got 80, 90 responses. Now today with these government surveys, I'm talking about GDP, which they survey. I'm talking about unemployment, all these things. You're getting less than 30 responses, 30%, less than 30%, some cases 25%. And you've got 350 million people. You've got 3, 4, 5 million businesses. And these maniacs are surveying a couple thousand people and they're getting very little responses. So you tell me. So the numbers today were shocking. And the press wants you to believe that has to do with hurricanes and the floods and the disasters and all of that. I mean, don't believe it, folks. Don't believe it. Because when you look at the revisions, what it tells you is basically this. We haven't gained jobs. We've lost 1 million jobs over the last 18 months. Full-time unemployment is down and has been down the entire year. Jobs, which are temporary jobs, continue to hold. Why? And again, these are government statistics. Most of those jobs are going to non-US citizens. So this is an election year. And all we've seen for the last year or 18 months and 2 years are numbers that are not correct. They're misleading. And they continue. But as soon as the election is over, the real numbers, there's no incentive to fake the numbers in, but they're going to put the real numbers. And the real numbers are horrifying. Because you have two economies. You have the Wall Street elite economy, and you have Main Street. Main Street has been in a recession for probably 3 years. Wall Street elite economy, no recession. That's the facts. No one could dispute it. I mean, you could dispute it, but it's a reality. So, you can't go by the numbers. You can't look at things like GDP, which they say rose 2.5% or whatever the number is. It doesn't matter. This number's fake. When the actual GDP for the normal folks is 0 to negative. That's the reality. And then the Fed, another completely manipulated. I mean, no matter who's in, they should get rid of Powell. This guy's a joke. And I said it before, the previous video, but it's been a long time since I've had a recorder, so I'm going to say it again. I did a deep dive over the last 60, 70 years, and I can go back even farther, but there's never been a rate cut with GDP at over 2.5%, 3%, 4% unemployment, and stock markets at all-time highs. And the key indicator is stock markets, because the Fed, they say they have their goal is to, inflation, all this. No. The Fed has one goal, is to keep the S&P 500 higher and to protect all financial assets. That's the only goal the Fed has. They say they have other goals, but no, they have one goal. And they start goals way back to Greenspan. The Fed put. He never tried to shy away from it. But using the Fed put at all-time highs, that's insanity. You know why? Because the S&P 500 is worthless. It represents only the Wall Street elite economy, and the rest of the economy is in the dirt. So Powell cut rates. He knows. But he's in cahoots and in the pockets of private equity and everyone else who, fortunately or unfortunately, a lot of them are trying to get the current administration rehired, as they say. Not fired, rehired. And it's bad, folks. It's very, very bad. And it's not just the government. Okay, I'm going to show you here. You got consumers. Because of this lousy economy, you've got no cash. As a percentage of your assets, you have no cash. You have no discretionary income. People living paycheck to paycheck. The situation is worse than it was before the pandemic. Much, much worse, as you can see here. Much worse. But in the gray line here, the green line, you see the stock market. That represents the stock market. It's fake, but it's going up. Real estate values. You go to Zillow. Oh, look at my house. It's worth double what it was 3 years ago. Try to sell it. And here again, personal savings as a percentage of disposable income. Again, we are below pandemic levels. This is a disaster. This is why credit card balances at our all-time high. This is why, at the end of the day, this is why they want to keep it this way, because the private credit funds, which is the fastest growing investment instrument in the United States and in Europe, you think, and it used to be just business loans. Now they're dumping in credit cards, everything. Everything. This is a bubble. People have no understanding what's about to happen. This is a bubble. And the other phenomenon that no one's watching is commodities prices spiking, basically at all-time highs. Agricultural commodities, it's ripping higher. What's keeping down the overall sector is price of oil. But that's going to go back up again. Well, unless Trump gets in, then it's probably going to plummet because he's going to overproduce. But agricultural commodities going high, what does that mean? That's inflationary, folks. That's inflationary. As you can see here, look at the commodity prices. Commodity prices are a reflection of growth in the global economy. The economy is in the dirt. We're at the lows. We're about to spike, and so despite very weak growth, we're going to see a spike in commodities. And what does that really mean? These charts are all dollars. Everything's looking in dollar terms. PCE, inflation, everything's in dollar terms. And the dollar has been strong recently, and take advantage of it, because we are going into a weak dollar environment. And a weak dollar means higher commodities, higher prices, and inflation. That's what it means. And so on Tuesday, whoever gets elected, we probably won't know for a few days. Doesn't matter, because this debt clock is going to go even faster. It's going to accelerate. People aren't going to delever. Credit card rates will stay 25-30%. These people are Shylocks. They're like old mobsters in terms of the interest rate they're charging. But no one seems to care. No one seems to care. But the unwinding is already beginning, except for the S&P 500. It's already happening. On my next video, I'll talk about the real estate market and some other markets around the world that are about to get pummeled. And it's already happening. So we are a few days away from election. Nothing has slowed down. Debt is accelerating. We're paying, what was it, some of $3 billion a day in interest payments. This is absurd. This is absurd. And money is still flowing out to other countries. And no one seems to care. So I'm going to try to do more of these now going forward. But as always, as I always say, if you're an investor in the S&P 500, you got to be really, really careful. Would I sell? Probably not. I'll wait till Tuesday and I'll sell, because that's going to be there. But the S&P just doesn't stop going up, and it won't stop going up because it's manipulated. So be very, very careful out there, and have a great weekend.